Hi guys, hope you all are doing well and had a good day in the market. So we are at that day of the week, right, where we do the weekly analysis. So we start with the disclaimer as always. Anything and everything that will be shared in this video is purely for educational purposes only. This by no means directly or indirectly recommends any trades that you might want to take, right? So pause it, read it till the end, every single word. And we are a SEBI registered research analyst, right? Excellent. So, weekend analysis, so it's going to be a bit long. And stay tuned right till the end because you know how much of the details that we share in here to an extent that our videos have started to become, way too long, right? So today I'm only going to focus on Nifty because the longer videos YouTube algo doesn't like too much, and I'm sure with your support we can do a lot better, right? So hit the like button already if you haven't, and do comment your view at the end of the video, right? So what did we analyze yesterday? We said cautiously bullish over 24,951 and super bearish below 24,608, while the trend has been sell and rise, and we've been doing that, right? So Nifty did gap down, right? That's something which I had also commented in my last analysis, right? Nifty, the possibility of a gap down and or a flat opening is high and not uh, a gap up, right? So this is what we had as on yesterday, and we said below this we will be super bullish. So we ended up, I think, selling this rice somewhere in here, and we'd also carried shorts, by the way. So a fantastic day overall, right? This was here, right, 9:15, and then the markets went up, and then sell on rise continued, right? So if you're interested in training and or interested in trading along with us, do check the description box below because I keep getting a lot of questions on those every day on Twitter, right? So do check that out. Excellent. So with that said, we looked at the disclaimer, so we're all set to go, right? Weekend analysis. So let's look at the really long-term view and start with the monthly, right? This is something that we touched on in yesterday's analysis because the month got over, one day of the month, and we spoke about this, right? Look at this. This is a level that is something that I will be absolutely keeping a close eye on, right? Pay utmost importance because monthly levels are, the most important. The higher the time frame, the higher the importance it has, right? So this is something that we looked at. So 24,618, which is where the markets have closed, is going to be very, very important for me, right? Which is exactly where the markets have closed. So monthly is bearish and it is trading below the previous month, which is in here, right? Which is this red candle. So if you look at in here, low was 25,625, 24,625, and today's close is 24,618, right? Lower than the previous candle. And we also did, the lower low, right? Which is 24,601. But hey, this is just one day's candle, right? And not relevant in here. But 24,618, the trend line that I have in here, or the horizontal line, is going to be super important, right? And this is something that we've been, I think, following since day one. We caught that reversal in there, and that the correction is starting. But look at this, right? I have never personally seen a five back-to-back red candles. I don't recall seeing one on Nifty. We had, four in here, and the fifth one was green. That's the worst that I can see. I don't think even on COVID we had that kind of fall in here, right? Look at that. One, two, three, four. One, two, three, four. Fifth candle was a green one. So this is more, lethargic with low volume, very difficult to trade because it keeps you on your toes, not knowing when the markets would reverse, right? Typically, we say that the when the market goes up, it goes in steps, and when it falls, it's a free fall, right? So this is very unusual. And the other thing is this one green candle, right? That it went up, it took four different candles, four monthly candles to cover this distance, right? Had it been a normal market with Jane Street, then this would have made a sense that selling is weakness. But ever since Jane Street have stepped down, this is not a market that is easy to trade, or rather, the personality of the market has changed, and we are still in that notion of studying the new behavior and coming into a conclusion, right? I always say we need to adapt with the market, let it be with Jane Street or without Jane Street. So definitely the personality of this market has changed, with Jane Street out, with low volume, with lethargic move and things like that, right? What is good is this week saw the highest selling of the last 4 5 weeks, right? So this is one good sign. But look at the body, it's lethargic selling. And the worst thing is you can't even sell calls because the premiums are so low that as a seller you would look at, is it worth the risk, right, that I'm taking. And on top, the global events, Trump, tariff, all of that is going on, right? So absolutely no reason to be bullish on monthly, weekly, and on daily. Right? And if you haven't watched yesterday's analysis, guys, you're here for the first time, please go and watch it, because then this analysis will make a lot more sense to you, right? On this candle on Wednesday, we said we need a follow up, which we didn't get, so we turned bearish from yesterday. And this is clearly a bearish candle, right? Doing lower high and lower low and close below the previous candle's low. Now, talking about the level, this is reminding me of this zone, because I think we spent a lot of time in this zone, right? Which is also coinciding with the monthly candle. Look at that beauty, how things are evolving, because this zone is where we said it's a complex correction and we rode it one day at a time. And this was a triangle that we looked at, right? And look at that zone in here. Nifty is exactly at that zone. So from where it got the support and went up, it has come and paused right there. So 24618 is going to be very, very important, because this is going to be a make or break zone, right? Look at how beautifully price on different timelines and the analysis that we did back, because then we said we could get support in here and we went long there, right? So this is going to be very, very important, right? So different time frames, monthly, weekly, daily, everything is bearish, right, from a price standpoint. Let's look at options data, right? On intraday, Nifty is clearly bearish. Look at that, 4.11 crore to 1.35 crore. And look at the fear the bulls have. They've written the highest writing that we saw today is at 24,200. And that's, 400 points away from, where the market is trading. And, the overall open interest, it was very interesting because in the beginning of the day, 24,700 had highest put writing, right? Let me put this so it shows the change of OI. Look at that, 24,700. This was the highest, and call was somewhere in here, right? You see that solid red. That is where calls were and puts were in here. So this was keeping us on the toes, but the moment it broke, it gave some confidence, right? And then we saw that call writing being aggressively written. So clearly, options data at one point of time was not in sync with price, right? It's very important. The more data points you can align with your view, the better it is for you to trade, right? Because this is a market where your first priority should be risk, then comes the reward. So I think that was a good confirmation. So now price and options data, they both are aligning, right? Now, we don't have the FII data, but I tend to miss, and maybe I should have recorded this video a bit late, but I wanted to finish the week much earlier. Now look at the FII index, right? As on yesterday, the FII long short ratio was at 9%, which means FIIs are long, net long, including index, options, everything. They're only long 9%, which means 91% of their positions are bearish, right? And I still don't understand why Sensible says this as indecisive. I have no clue. I think, this is a bug for today. I hope these numbers are good. Look at the future short minus 1.38 lakhs, and they did a bit of short covering yesterday. We don't have the data, so when it is available, do have a look at it, and or I can also post it on the YouTube. So keep your notifications turned on. I post quite a lot of things these days on YouTube during the intraday market, so keep the notifications on, and it may only help you, right? And then future short calls, their short puts, they're long. So net their position is extremely bearish, right? So 9% is also the lowest long short ratio that the FIIs have ever had in this year, in FY25, right? We are almost over half of the year running, the eighth month. So imagine the kind of shorts that they have. Pros index peanuts, right? Calls their long, puts their short. So pros are also net shorts, right? The only one who's long here in is clients, which is we retailers, right? And on top, there could be other big players who are falling in the bucket of clients. So look at the index futures. They're long, 1 lakh contracts long. Index options calls they've shorted, right? So this is crazy, and puts is 3.43 lakhs. I mean, this is super bullish, right? So when the data is available, we'll have to look at it on how things have evolved today, right? Because as on yesterday, they were bullish, and the market showed, who's got the ammunition. Because it's not only about building positions, but it is also about how much money do you have to move the market in that direction, right? That's even more important. So price is bearish, options data is bearish. Now let's move on to Elliott wave, right? And I think yesterday we spent quite a lot of time, and I also had comments. So today we'll not spend too much of time on Elliott wave and move quickly, right? So since this is weekly analysis, I'm going to reiterate, right? This is what we had it as 1, 2, 3, 4, and 5, right? With 4 as um, a triangle is what we looked at, right? A lot of people also commented that others are copying us, right? We're not here to get distracted, right? Focus on what your labeling is, because if you tend to copy and or to look at what others are doing, you will only get distracted, right? So this was the spoiler, right, of this entire trend, because I was talking to one of our students earlier today. Had this been a clear wave one, this would have been a blind short or selling calls no matter what was happening. But this is what trigged, because if you recall, we had multiple possibilities open for this. And as on yesterday, the other possibility that I looked at also was 5 ending in here with a truncated 5 of 5, right? So these are the two possibilities that I had, right? But nonetheless, keeping both open, if we look at this fall in here, this is a clear impulsive waves, right? So this is clearly 1, 2, 3, 4, 5, right? This is another 5 in here. This from yesterday that we looked at is another 5 in here, right? So on a larger degree, even if we include this as wave 1, this is wave 2, wave 3, 4, and 5, right? This is what we had. I'm going to move it into a super millennium or primary degree, right? This was the 5 wave that we completed, and then this we had it as the possibility of an ABC, right? We also discussed about 3 getting over in here, 4 getting over in there, and 5 ongoing. But I think this is the possibility that we all uh, align to, at least with the students. Do comment, right, if you're looking at 3 in here, or the way that I have it in here. If that is the case, which means this is going to be wave 1, right? This is going to be wave 1. This is going to be wave 2, very shallow retracement, right? Because if you look at in here, from here to here, it has retraced between 38 to 50%, which is typically 4. And one of the reasons why 5 could be in here, right? Now 5 all the more cannot be in here, because the low of 5 is broken once again today, right? So if this is 1 2, and if this is subwave 1 of 3, right, if this is subwave 1 of 3 and this is subwave 2 of 3, I'm going to let you calculate the target for wave 3, right? So if this possibility holds, I don't use words too loosely, but I wouldn't be surprised if we do a Black Monday or a Blood Monday, right? It's going to bleed, um, more than the index, all our portfolios, right? So this is the possibility that I'm more inclined towards, right? From the overall, trend standpoint, no matter how I slice and dice, this is clearly an impulsive wave, right? And this is clearly an impulsive wave, right? At a lower time frame, and the low of 1 is taken out. Unless this becomes an irregular flat and 2 is still ongoing, which is possible, but the possibility of 2 ongoing is less, right? Because hey, this is the market, and you have to take a call at the end of the day. And so I'm going to keep this as 1 getting over in here. And if all goes well, I would not be surprised if we do a massive gap down, right? So we are continuing the correction. How long and deep can it go? This is how I'm looking at, from all the way from this low to the high in here. The first target was 24,862. The second one is 24,283, which is another 500, 600 odd points for Monday. So guys, that is all I had. There's a lot of effort that goes behind this. I'm sure you've already hit the like button. If not, please do, because I see a trend. The likes are reducing. That's not the kind of support that I was expecting from you, because I know you all appreciate the analysis that we do. And if it does, hit the like button. And you know if I find time, I will do the analysis of Bank Nifty. So do comment if you're looking for Bank Nifty analysis or not. To summarize, price is bearish, options data is bearish, Elliott wave is also indicating bearishness, right? So let's ride the trend or the correction along, because I keep saying your reward is better, your risk to reward is better when you go along with the trend and not against, right? So I'm not looking at buying calls. If the market rises, I wait, and I would always look at shorting that market, than instead of trying to trade both sides. And as always, do comment your view. It is more important, or most important, for me to hear from you, right, on your view. So guys, have a great rest of the day, and enjoy the weekend with your friends and family, and share it. I'm sure you have a lot of WhatsApp group, and if this is helping someone to be at least on the right side of the market, right, that is more important. I think it's a win-win situation. Guys, cheers, bye now.